Hello, and thank you for taking the time to watch this training video where we'll be discussing how to fill our ACA employer sheet. And this will be presented by me, Sandro Vivas, Marketing Communications Manager and ACA Specialist here at Diversified Administration. Please have in mind that starting 2019, the same sheets will be used even for late filers. Those are clients that did not file in previous years and are doing it now. So we do not foresee any major changes for the IRS, so we are confident that the instructions in this video will apply for future ACA reportings. And of course, if there's any major changes, we'll address them then. So let's get started. Well, first, a disclaimer. The information presented is solely for educational and informative purposes. It must not be considered legal, professional, or tax advice. Employers are advised to consult with a qualified benefits attorney. With that being said, as you may already know, our ACA process, takes into account two data gathering sheets. One is the employer data gathering sheet, which we'll be talking about today, and the other one is the employee data gathering sheet. Of course, we'll be discussing the employee data gathering sheet today, and let's take a look at it now. This is the sheet, and this is for the 2019 ACA reporting year, and it's pretty evident by the 2019 here in the corner and also in the file name. As you can see, it has several columns for each company that is part of the control group, and I'll explain that in a moment. And then you'll have the different sections in column A. First, a section that has to do with the company information, a blue section that has to do with the first plan, and then a green section that has to do with other subsequent plans. Let's talk a little bit about control groups. Control groups are basically formed by a group of companies that have some kind of common ownership, as defined by the IRS. It's important to report all companies that are members of the same control group, and one of the reasons for this is in order to determine if you had 50 or more full-time or full-time equivalent employees in the previous year. The problem is that if there was a company that was by itself, had 20 employees, might have not believed that they didn't have to report. And this is a common occurrence because many HR departments are not aware of the owner's interest in other companies. So in other words, if there are three companies, each with 20 employees, and 20 full-time equivalent employees in the previous year, they need to file as a control group as they total 60 full-time employees in the previous year. And of course, this is important because, again, if you did not know you had to file, you didn't file, you'll definitely get a penalty for not filing. And furthermore, these penalties tend to be higher because the IRS will interpret you not filing as intentional disregard. And they do not look kindly to companies that do things with intentional disregard. So very important to see if you're part of a control group. So now back to the employer sheet here. The company information is straightforward. You have the company name, company EIN, address, phone number, and signer's name. Let me bring your attention to the company name and employer EIN, employer meaning company. It says here, as on the IRS EIN verification. The IRS EIN verification is a document that the IRS sends you with the name of your company and its EIN, and it looks something like this. As you can see, the company name will be written as well as its EIN. Here they have been replaced by zeros for confidentiality. And basically it states the name of the company and the EIN. So any document from the IRS that contains both name and EIN is acceptable. And once you get this document, you will send it to us for us to start using the name exactly as the IRS has it. However, they might be that you don't have this document. So if that's the case, it is important for you to contact the IRS and get it. So in our next slide here, we have, again, the name and EIN must match the IRS's databases. The best way to do it is with an IRS verification document. In order to get this document, if you don't have one, you must contact the IRS by calling their IRS Business Specialty Tax Line at 800-829-4933. There's an important phone number that you should always have handy in case you need to contact the IRS. When talking with a representative, request an EIN verification document, which is the document I showed you a moment ago. However, be proactive and ask them to fax it to you, because standard procedure for them is to mail it out. And if they mail it out because of the backlog, you might get that document a month or more after the phone call. And that could actually bring some difficulties because we will be working with a name that might not match the IRS databases. So once you get that document, use the name exactly as it is in the document and send us a copy for us to use the same exact name. Be aware of the following though. The IRS only accepts two special characters in the name of companies, and those are hyphens and ampersand. Any other special character is not accepted, such as commas, apostrophes, even two spaces. This is, you might have done a typo, and instead of putting one space between two names of the name of the company, two words of the name of the company, you left two spaces, and this will automatically make the name not match the IRS database. So you want to avoid that. Other special characters as the $, underscores, asterisks, and also foreign letters or accented letters. Those will not be accepted, and again, using any of these will automatically make the IRS reject your filing. We put an example here. Joe's Barbecue and Salads Incorporated. Here you can see how you usually see it written in even legal documentation. However, this will be unacceptable for the IRS. The IRS will have the name of the company as Joe's without an apostrophe, B-B-Q, well, hyphens. Why? Because hyphens are accepted, as well as the ampersand. Salads, Inc. No comma, no period, because again, those are not accepted. This, of course, is per the IRS, and we have to follow what the IRS says, even though you might have been using the name of your company for years in that same written, like with commas and periods. But again, we want to be sure it's accepted by the IRS, and we also recommend that you use that name with any other communication with the IRS to avoid any possible situation or rejection in the future. Going back to our spreadsheet, and let me zoom a little bit so you can see a little bit better. So having the first section filled with the correct name and EIN shouldn't be a problem. Now the signer's name. The signer is the person whose name is going to go in the 1094 form. The 1094 form is the form which contains the company information that will be sent as a cover letter for all the 1095s that you'll be submitting to the IRS, namely this document here. So the signer's name will be the person here as the name designated, the name of person to contact here on the sheet here. And the signature here, even though it says that the person is the signer, because we're submitting this digitally, there's no signature necessary. And of course the title that will be pulled from our sheet, and the date, which will be the date that we submit this for you. So that is why we need the name of the person that's going to be, again, quote unquote, the signer. Name, title, and email for communication purposes. Now let's go to and talk about the plans themselves. First, I want to remind everybody that the plan that you will be reporting is the cheapest plan available to all your employees. This will be the employee-only, cheapest, bare minimum plan available. If they, by any chance, you have a buy-up plan or more expensive plan or a plan that includes dependents and so on, that's fine, but that's not what we're reporting. We're only reporting the plan that is available to everybody and the cheapest of them all. Now, let me clarify, the cheapest for the employee, because it's going to be based on how much the employee contributes on a monthly basis and not the monthly premium that you pay as a company. If you have two groups of employees, let's say, that for whatever reason one plan is not available for both groups, then you'll need to enter the information a little bit differently. And of course, that has to do with special setups and so on. So we address those on a case-by-case basis. So please contact us if you have such of those cases, and we'll figure it out for you. But the filling this sheet itself applies to any situation. So we'll continue with this training. I suggest you continue with this training. Now, by now, I'm pretty sure that the plans that you're offering your employees are all compliant. So we're assuming that. But if by any chance you have a non-compliant plan, our sheets also can address those, but we only want to make a note that offering a non-compliant plan makes you liable for penalties. So with that being said, let's start with the first plan. If you have a calendar year plan, meaning that it starts on January 1st and ends on December 31st, you will only use the blue section of this sheet and leave the green section blank. The green section is only used if the first plan is not a calendar year, meaning that it did not start on January 1st, or it could be also that it started on January 1st, but the plan for some reason was a short plan year, so you'll need to complete the year with another plan unless you did not offer a plan for the second part of the year. And again, if there is a third plan or fourth plan, the additional green sections are there for that, for you to enter them. Now, how do we fill this? As you can see, row 19, where the first blue section starts, has a name of initial lowest cost plan. This name we don't use, but it's a good idea to name the plan in order to refer to it in the future. This is more a reference for you in order to be able to find the plan if the IRS already knocks on your door and asks, hey, what about this plan? And you can find it. You can readily find it in the sheet. So as an example, let's name this plan our ABC plan. Again, you can name it whichever way you want. And let's say that this plan is a calendar year plan. So in plan start date, you'll enter 1/1, in this case 2019, and it'll end on December 31st, 2019. That's pretty straightforward. Waiting period. This is the time the employee must wait before being eligible for the benefits or for the coverage in this case. As you will see also, each one of these cells will have a small comment that briefly explains what information is needed. So in this case, for the waiting period, you have several options. You have date of hire, 1 month, 2 months, 30, 60, and 90 days. So you will choose whatever waiting period applies. Let's choose 60 days just because it's the most common waiting period. Then, when does the plan become effective? When does the employee become eligible? Is it code 1 or code 2? The comment box explains that code 1 is for the coverage that begins immediately following the waiting period. So if you choose code 1, that'll mean that the day after the 60 days, the plan starts. That means the plan starts on the 61st day. Code 2 will be if the plan begins the first of the month following or coincident, that means that it coincides with the completion of the waiting period. Meaning that if the plan starts the first of the month following 60 days, you'll use code 2. So let's use that code 2 because that's the most common occurrence. Waiting period is 60 days and the plan starting the first of the month following the 60 days. Cover termination date. When does the plan end, or when does coverage end for a particular employee if the employee is terminated? Does it end the date of termination or does it end the end of the month? Pretty simple. Let's go with the standard, which is end of month. Meet minimum value. If your plan is compliant, which I sincerely hope so, it should comply with a minimum value provision, which means that your plan must cover at least a certain percentage and certain services in order to be compliant. As a rule of thumb, it should comply by covering at least 60% of the medical expenses. However, we strongly suggest, if you're not sure, to consult with your broker in order to confirm that your plan is compliant with the minimum value provision of the employer mandate. We want to see a yes here always. However, if it's not compliant for any reason, you must report that and you will see a no here. But if you have a no here, that immediately does make you liable for penalties. So we want to see a yes here. The employee required monthly contribution. This is the amount the employee pays every month for insurance. It is not the premium that you pay as the employer. It is just a portion of that premium that the employee pays on a monthly basis. So let's imagine, for the sake of this training, that the monthly contribution for your employees, for the cheapest, not what they actually pay, but what they will have to contribute in order to get the cheapest plan that you have available for all your employees. And let's say in this case it's $100 per month. Affordability safe harbor. You might have heard about these 3 safe harbors available for the ACA. Rate of pay, W-2, and FPL. That stands for Federal Poverty Level. The rate of pay says that for 2019, if the amount the employee contributes on a monthly basis is 9.86% or less of the gross monthly income, your plan is affordable. If it's anything higher than 9.86% or more, it makes it unaffordable and therefore non-compliant. For this year, that represents 9.86%, but that changes year to year. So you also be cognizant of that, because it might have been that last year, I believe it was 9.56%. So you must be aware of that change in order to make your appropriate calculations. W-2. W-2 is when you take the W-2 that comes out the following year, and then you figure out how much the employee made and then make a calculation looking in the past and figure it out if the monthly contribution was affordable for each month of that year. We do not recommend using the W-2 simply because first you have to wait till the following year to know how much the employee made, and then you have to look back, which can actually bring about mistakes, errors, omissions, and so on, and we want to avoid them at any cost. And finally, the FPL, federal poverty level. When using the FPL, you're telling the government that even a poor person can afford your plan. For 2019, we use the previous year federal poverty level, which was $12,140. With the affordability percentage of 9.86%, that means that the maximum monthly contribution for a person on the poverty level should be no more than $99.75. So being that in our example we're using $100 as an example, we cannot use that safe harbor. We can only use either rate of pay or W-2. So because we don't recommend using W-2, rate of pay will be your safe harbor. If your plan, your employee's contribution to the plan is $90, which is less than the $99.75, then you can also use rate of pay, W-2, or FPL. But we strongly suggest that you use FPL because it lends itself to less scrutiny on the part of the IRS. So let's leave this example. $90 per month as the monthly contribution from the employee. The FPL safe harbor, because those $90 are less than 99.75%. And then we go to the funding. In funding, you have three options. You have fully insured, self-funded, and combination. Fully insured means that the insurance company is the responsible party for covering medical expenses if the employee needs medical attention. The self-funded plans are in which the employer, the company itself, is responsible for covering those expenses. And combination is a combination of both, but combination plans are treated exactly the same as self-funded. Additionally, if you have a self-funded plan, you will also need to report dependent coverage information. While if you have a fully insured plan, we don't deal with dependent information. We only deal with employee information, which makes it much easier. So let's imagine that in this case, you are fully insured. The next two questions are pretty self-explanatory. Spouse coverage offered, yes or no? We'll enter yes. And dependent coverage offered, yes or no? Yes. There's a possibility that you do not offer spousal or dependent coverage in your plan, in the plan that's listed here. That we need to know if that's the case, but be reminded that this might trigger some sort of penalties for not being compliant, and also the codes that will be generated based on this will be different. So this is what we want to see. This example was for a calendar year plan. So let's imagine that this plan now was not a calendar year plan. Let's say that this plan started on 7/1/2018 and ended on 6/30/2019. Everything else remains the same. 60 days, code 2, first of the month, finally 60 days, end of month, yes, $90 in FPL, and so on. But because you still have to offer coverage for the second part of the year, you need to enter a second plan. In this case, let's name it ABC again, Plan 2. Again, you can name it any way you want to, any way that actually will be a quick reference to you to come back to the plan if you ever are asked about it. So this plan, unless there was a pause between both plans, should start on 7/1/2019 and run through 6/30/2020. The rest of the information will be entered similarly to what we just did for the first plan. The waiting period could be 60 days, but because it's a new plan, it could have been shorter now, let's say 30 days. And possibly you decided not to offer the first of the month following the 30 days anymore, but on the 31st day. Coverage termination date, the same thing. It could be any of these. Let's say date of termination now. Meets minimum value. We always want to see a yes here, so we'll use a yes. The employee required monthly contribution, same rule applies. Let's say in this case it was $100.00, so you cannot use the FPL anymore because again it's higher than $99.75. So we'll use the rate of pay. Funding, let's say that for this period this plan is self-funded. And again, we want to see yes for spousal coverage and yes for dependent coverage. And that's it. You completed a full year. Even though this plan started in 2018 and this one ends in 2020, we're only concerned about the coverage in 2019. So you need to enter just these two plans. You do not have to enter the plan that started on 7/1/2020, nor any plan that started before 7/1/2018. However, let's say that there's a possibility for those companies that might have had more than two plans, and let's briefly put an example here. Let's say that this plan ended on 10/30/2019 because you didn't like the carrier, something happened, you decided to go for another plan. So this plan only lasted 3 months. So you still need to offer coverage for the last 2 months of the year. So you'll enter, again, the name of the third plan in this case. In this case, it will have to have started on 11/1/2019 and surely ended sometime in 2020. Let's say 10/31/2020. And here I made a little mistake. That's a 31 there. There you are. And the rest of the information is entered similarly. But again, most likely you will either have a calendar year plan in which you only use the blue section, or two plans during the year in which case you'll only use the blue section and the first green section. So, as you can see, filling this sheet is pretty straightforward, not too difficult, and it usually takes no more than a few minutes to complete. Once this sheet is complete, the next step will be to save it, and when saving it, as you can see up here, there's the company name as in the IRS document. So once you get that name from the IRS EIN verification document, you will enter it here, but please also use it in this portion. Just replace the company name as in the IRS documentation by your company name and save it. And save it and send that document to us for review. Once we review it, if everything's okay, we'll note it as final and we'll send it back to you for your records. If it is not complete because, for example, we're still not by the end of the year, so probably you don't have the information for the second plan yet, then it's okay. That section will be blank and we will note your sheet as okay instead of final until such a time you get the information for the second plan, and once we get that information, we'll note it as final. So with this, we have addressed how to fill our employer sheet. Again, a reminder, this sheet is also, we foresee no changes to this sheet in the future, unless the IRS comes up with totally new guidelines. It will also be used for previous year filings for those employers that come to us because they did not file in previous years. And you will see that for those years you have LY, that means late year 2017. And again, for the current ones, you only have a 2019 there. And with that being said, again, thank you very much for your participation. And if you have any questions whatsoever, please give me a call. The number is 954-983-9970, and my direct extension is 105. Or you can reach me at sandro@div125.com. And just a couple of last minute notes here. We also deal with IRS penalty letters, such as letter 226J, if you made mistakes in previous filings. And also, if you did not file, you might receive another kind of notification assessing penalties. We are totally able to help you with those, so please give us a call if you receive one of those. Same way, if you did not file, you need to file right away for previous years, because those definitely are going to generate penalties. So please contact us for those, and we'll be able to help you with those also. With that being said, again, thank you very much. Have a great rest of your day.